The green to the New York Stock Exchange on St. Patrick's Day, but it was red all across the board. The Dow dropped 372 points. The S&P fell 283, and the Nasdaq was off 68 points. Meanwhile, investors pulled back from positions in First Republic and other bank shares over lingering concerns over the state of the U.S. banking sector.
And speaking of, the parent company of Silicon Valley Bank has officially filed for Chapter 11 bankruptcy protection. The filing happening today in New York Bankruptcy Court. It's the largest bankruptcy filing stemming from a bank failure since 2008. The bank itself, Silicon Valley Bank, is not part of this Chapter 11 filing. It is under the control of the FDIC and has been for about a week now since the government took over the commercial bank, which was teetering from a run on deposits. The Chapter 11 filing is expected to ease a sale of its non-bank businesses.
And joining us now to shed some local light on the banking story is David Sacco, instructor in the Finance, Economics, and Entrepreneurship programs at the University of New Haven. Thanks for joining us.
Thanks for having me.
Yeah, David, we appreciate your time today. Treasury Secretary Janet Yellen is telling lawmakers in Washington and everyone else that the banking system is sound and that all is well. Do you think that's true from your perspective? Is all well?
Well, all's not well because obviously several of these institutions have had some problems. But in general, the banking system is pretty sound. The largest banks in this country are as well capitalized as they have been in a long time. And the problems that Signature Bank and SVB had were a little bit specific to them due to their depositor base and the kinds of business that they were in. But I think most people should not have to worry about their deposits, especially since the government in the last week came out and explicitly stated that they're not only insuring the $250,000 that the FDIC insurance covers, but they're basically insuring all deposits at this time.
So people in Connecticut are less concerned, right, about Silicon Valley Bank and more concerned about local banks, our local deposits, so where we deposited our money. So what should they be thinking right now?
As long as you're below that, I mean, well, in normal circumstances, as long as you're below that $250,000 limit and your bank has that FDIC sign in the window or on its website somewhere, you are completely safe because the government is completely guaranteeing that. Depositors who have more than $250,000 before this week had something to worry about because the government wasn't explicitly protecting those deposits, but resulting from what happened with SVB and Signature, they basically stepped up and did that. So essentially anyone who's got money in a deposit account at a bank that is FDIC insured is in good shape, and the government is essentially going to back that up.
You know, David, there have been a lot of YouTube financial advisors predicting a big banking collapse and telling people they should get their money out of the banks for a long time, well before this latest round. It sounds like you're saying there's no reason to take them seriously, really.
No, not at all. I mean, the U.S. banking system, the banking system is so important to our economy that the government's always going to do everything it can to protect it. And again, outside of, and there may be a handful of other banks like SVB and Signature, First Republic was another one, but all these banks had specific sort of idiosyncratic problems with either their deposit base or some of the positions they've taken with their deposits. But I think, like I said earlier, the big 5 or 6 banks in the country are in pretty good shape, and the Federal Reserve has enacted programs to make sure that all banks in the U.S. have access to a lending program that will allow them to pay all their depositors.
All right, David Sacco from the University of New Haven, thank you. Appreciate your time today.
Thank you for having me.